welcome to NDTV Profit. I'm Anushi Vakharia and today we'll be discussing about the new listing in town, that is Enviro Infra Engineers IPO. Now, we'll be breaking down the long-term strategies, the key valuations, what's the way forward for the business and more. But before that, let's talk about the key details of the company. So the issue opened on November 22 and will close for subscription on 26th of November. This issue came with a price band of 140 to 148 rupees, and this is at a fresh issue component of about 572 crore along with an offer for sale of about 78 crores. So this adds up to a total issue size of about 650 crores. The lot size for this issue is about 101 shares, and market value as per NDTV Profits calculations comes up to about 2,598 crores. Now, other than that, let's understand what's the business. So the company is involved with the designing, construction, operation and maintenance of water and wastewater treatment. Along with that, they're also into water supply scheme projects for the government body. So this is the key business of the company, but let's see what more we can talk about, how this is translated into the financial revenues for the company. So if we see the FY24 numbers, we're looking at very healthy set of numbers, 115% of a jump that we are looking at in terms of revenue, which is reflected in its EBITDA as well, 107% of a jump that we are seeing. This is translated in the PAT as well, 96% of an increase compared to the FY23 levels. Margins have remained more or less in the 23 to 25% of range. So this is on the financials that we are looking at, but how the company will now be utilizing its fresh issue proceeds, which we've spoken about earlier, let's understand that. So some of these would be used for working capital requirements, which adds up to about 181 crores. This includes also infusion of funds in their subsidiary that comes to about 30 crores. Along with that, they'll be also utilizing the fresh issue proceeds for repayment of debt, adding up to about 120 crore and funding some of their inorganic growth opportunities along with some general corporate purposes. Now, coming to the order book of the company, the order book adds up to about 1,906 crore. This is as of June 24 end. This order book is divided into 21 water waste treatment projects in the two segments that we have spoken about. As we move forward with the business, how these orders have seen their bidding ratio. So 17% was the mix that we've seen, the success ratio, which has gone up significantly to 41% in FY23 and to 58% in FY24. So a total of 38 to 39% is the success ratio that we are seeing in this last 3 years. But now, what's the way forward for the business? In the key strategies, increasing size of projects, they are aiming for higher ticket projects. So this includes more economies of scale, higher margins and lower competencies. Along with that, they are also expanding their geographical footprint and plan to further bid for HAM projects as they move forward for the business. Other key strategies also include initiative towards other waste-to-water projects and capitalizing on government policies and initiatives like Jal Jeevan Mission. Now, these are the key strategies of the business, but let's come to the valuations, which is the main focus here. If you look at Enviro Infra Engineering and compare its FY24 PE, that stands at about 18.3 times, which is at a discount compared to its peers like EMS, Vatek, Wabak, and Vishnu Prakash R. Pungalia. So it is trailing at a discount based on the trailing PE that we are looking at. So this is the valuation pictures. Now, let's understand the key risk of the business. First, it's a working capital intensive business. So that remains as a focal point. Other than that, a high portion of the business relies on government funded water and wastewater treatment plants. So any kind of disruption in the government side in terms of order bidding would impact the company's operations. Along with that, in the key risk, we are also seeing that any failure to qualify for further bidding in future bids could negatively impact the business of the company. So these were the main key risks that we are looking at. Let's come to the final, which is the brokerage recommendations. We are mostly seeing a long-term subscribe rating. Firstly, by Anand Rathi, they have given a subscribe for long-term rating, believing that the IPO is fairly priced. And along with that, the track record of the company has remained pretty consistent. So they've given a long-term rating for this stock. Other than that, if we look at other brokerages, even Choksi also maintains a subscribe ratings, seeing a reported revenue CAGR growth of about 81%. And this PAT CAGR, that's a net profit growth of about 77% from FY22 to 24. Last one on the brokerage radar is from Bajaj Broking, wherein they've also given a subscribe for a long term, and they have maintained that average EPS of 5.95 rupees in last 3 years is a positive that we are looking for the company. Along that, they've also mentioned that the IPO is fully priced, but what we have to still consider is the debt level of 305 crore as of June 24, which raises some concerns. But this is the overall roundup that we are looking for this IPO. So let us know in the comments below, what do you think about this company? Is it a subscribe or not subscribe from your side?